Towards the end of the video yesterday for GTII, I explained that I may be wrong with the 70 cent to 66 cent thesis, right? And I explained that we could be at a floor. And it looks like that was definitely it, right? Here's the line that we were talking about yesterday, right? So what is happening with GTII? What could be happening for the next days? Well, I have a pretty good idea. Okay, you guys, let's go ahead and go over these conditions now. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with a GTII technicals, raw price action, and statistical thread of analysis on this Hump Day Wednesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, you guys, so first of all, very, very important closure here on this bi-daily candle. First of all here, because we do have in 18 hours and 42 minutes the potential of a huge bullish engulfing candle formation, right? So this would be it right here. Let me just get rid of the Gaussian channel so we can understand exactly what that means, right? So usually when you get the forward candle engulfing the previous candle, they must be green and red, right, in order for this to be considered a bullish engulfing candle formation, which usually presents an upside continuation, right? So the inverse of this would be the bearish engulfing, right? So then that would suggest a downside coming in, right? So what's really cool here is that I believe we have this in multiple time frames, right? So we do have a daily closure. We already got the bullish engulfing on a daily, right? So now the next one to close would be 18 hours and 41 minutes for the bi-daily to close. And let's see the 3-day may actually be a bullish railway tracks. Okay, so it looks not bad at all. It looks pretty good even still, right? So closing this 3-day iteration upside of the opening of this previous candle here, which was 145, would actually, give us a pretty good opportunity for the continuation to the upside for days to come. Okay, so now let's go ahead and open up that Gaussian channel once again and go back to the bi-daily. As yesterday we were speaking of finding that bottom side of the Gaussian channel here on the bi-daily, right? So we still had a bias for the downside, right? Because we do have that golden mean at that 73 cents. Right, but very, very curious here that we ended up getting this massive upside today. We pretty much used these. So the shorts that were actually listening to me, betting on that 73 cent zone pretty much got used as liquidity today from the bulls, right? So very, very good formation here on the daily too, as we do have a tweezer bottom here, or very close to being one, another bullish formation that can suggest a continuation to the upside, right? The daily reclaiming the inside. I know, I'm trying. The daily actually reclaiming the inside of the Gaussian channel here, okay? So the Gaussian channel on the daily has a top side target of about 172, while the bi-daily time frame has a top side target of about 175, okay? So that's looking pretty interesting, that 175 target. Okay, so keep that, or 170 to 175. Keep those targets in mind, okay, because we need to continue on the analysis here. Okay, so this is that bearish formation that we were looking at, right? So because we got that tweezer bottom, or those two iterations to the downside, this formation actually changes now. And now what could I possibly mean by that, right? So let's just go ahead and see. So this would be formed in this manner instead, okay, just like this, right? We can adjust this downside here to probably around that area there, right? And then this, we maintain it at, it's always been at the, we always had that resistance at the 147 here, which is perfectly aligned with that, right? So let me go ahead and make sure that I can modify this without actually interrupting that 147 touch, right? Just like that. Okay, so now we can see that this is a falling wedge, right? So the falling wedge is a bullish formation too. Okay, so how can we even tell that we're in it in the first place? Well, first of all, we need 2 touches of the support. We need 2 touches of the resistance, of which we have plenty of. And the last metric to kind of look at here would be declining volume, of which we also have. So all these things validate that you're within this bullish formation. Okay, so now instead of having this downside target, from the top side of the triangle or the bottom side of the triangle based on a a right angle triangle, right, this actually turns into a bullish formation of which we can take the price objective from the very top side of the triangle all the way to the bottom side of the triangle. It could arguably be right about here, right? Connecting these dots here. And then we can apply it to the zone of breakout. Okay, so let's just say that we were to break out from the next bi-daily iteration, right? So let's just say that, you know, in 18 hours and 37 minutes, this bi-daily will close and we'll start the next pivot, right? You see how it notches, it notches, it notches, it notches. That just shows you where the next bar is going to be located, right? So let's just say that we did break out from that next bar, right? So something along the lines of this. So let's just go ahead and take a look at our top side target here. So please notice that we're actually going to 361, right? But if, let's say, that the effect of this candle still being closed actually has us break out from this zone here, then let's adjust our breakout to that zone there. And look where it takes us. We're being taken to about $3.72. Yes, sounds familiar, because $3.75 would actually be located. I'm sorry, $1.75. Wow, actually $3.75 top. Not bad whatsoever, right? So, wow, I'm sorry, guys. I don't know why I dropped the ball. How the hell are we going up that high, right? So, yeah, this guy over here, who the hell hired ARCa, right? So, $3.75. I thought this was actually the $3.75 top right here, right? You guys know, in fact, not. Let's go ahead and see if we have any confluence within our upper targets from our Gaussian channel on the 5-day and even the weekly. Okay, so let's just see what reason could we have to go all the way up to 375 in the freaking first place, right? So let's go to the 5-day and take an inverse fib, or actually a regular fib, from the swing high to swing low of the range, right? So right about here to this zone down here. Okay, so let's see what 375 even rhymes with, right? So 375 or 370, right, could be right upside of the 1.618. Okay, so that's good. So that gives us a range of resistance, right? So we're gonna go ahead and just note that down here, just in case, right, before we actually start dropping the ball again. All right, so 339, right, to that 370. Let's just say 373, right? Right about here, we have an area of resistance. All right, so now let's go ahead and take a look historically speaking to see if there's anything that we've had there at 373. So in fact, this 5-day candle here has a high of 369. Very, very familiar to what we're looking at right now, right? So another 2 candles here that share that resistance range as well. Okay, so yeah, the top side of this would be a good area for us to combat, but I would really like to get over the target of about 175 in the immediate short term, right? So as it does have a lot of rhyming here with the mean band on both the 5-day and the 3-day iterations, right? So 175 to 189, a little bit of a resistance range here. We could find a type of resistance here and then come back to our 147 or 148, right? Validate as a good area of support before continuing on to the upside. Usually that type of thing kind of happens, right? We'll face the upside here, and then we'll retrace back to validate our newly converted resistance into support before a continuation onto the upside. But that's a very impressive target here. Let me see if we can actually get the second set of bulls in. Remember that when we're trading a triangle like this, we're looking for the breakout close to the at least 65% to the apex of the triangle, which we arguably have. Right, we're pretty much there already. So now the second set of bulls would actually be trading from the center of the triangle, a price objective from the center, right? So somewhere around here is where we can get another bull perspective, right? So let's just say that we were to break out from this area here, and that would take us to 248. The second area that we can actually keep in, the third area that we can keep in mind would be from the breakout zone itself. So let's go ahead and take a metric from that zone there, right? So just like this is very discretionary, okay? There's no actual back test to this. It's just to say that this is just another way to kind of look at trend, right? So this would take us to about $2.19, right? So let me just highlight that one more time. Yeah, to about $2.17 it'll take us. So it's looking pretty good for the bulls in either case, right, you guys? So the more immediate short-term time frame resistance to kind of be faced, I would actually have to favor this top side of the range here, which has a range of about, let's see, to the top side of this candle here and the top side of this candle here, 178. Okay, so that actually sounds more like the Gaussian channel that we were looking at on the bi-daily and 3-day and 5-day, right? So just like this right here, that's where we can get an official range, right? So we can expect the type of pullback from about 184 to 170. Let's see, 178, right? And then this could actually retrace back, validate our current newly converted resistance into support, then continue onwards and upwards, right, into realizing either of, probably, either one of these or all of them, right? So that's kind of what I'm looking at as far as that trend, right? So a few days ago, somebody asked me whatever happened to your chop zone, right? So it's very interesting that we're back in it. Right. So remember that this target here, 182 or 180, I'm still looking at that target as a relevant area of resistance, guys, which also has to do with the 175, right, that we were looking at, right? The 1 fib at 179, the resistance range at 181, the Gaussian channel at 175, 178 on the 3-day. See, there's a lot of 170 talk there too. We just have to move the way that the chart is suggesting for us to move. Okay, you guys. So, So here is that bottom support that we were looking at, right, where we were saying that we may actually be wrong about the 70-cent retracement, right? So we actually did bounce to the upside. I mean, it was a huge bounce to the upside, of which I have to be honest, I didn't expect. In fact, every momentum oscillator was suggesting a downside, right? So pretty much the bulls used those shorts as a serious pool of liquidity, right? For an upside move here. Very, very impressive price action coming out of GTII. So now let's look at the last part of the analysis here, guys. This is going to be the RSI. So 30-minute immediate short-term time frame, looking like it's slowing down just a little bit, still in the overbought percentile with an upside pivot on both that RSI signal and the SMA 14. So it's looking pretty okay, even in the short term. All right, so now as we start moving into the upper term timeframes, you're going to notice that we have just massive upside pivots in every time frame after the 30, right? So actually, I'm very curious to even see the bi-hourly time frame. So bi-hourly time frame, man, in the bullish control zone here with an upside pivot, even still 14-day simple moving average, having a way to catch up. And what I would like to point out here is, in fact, the 8-hour and the daily making very, very critically important crosses upside of the SMA 14. And I mean, just this is a very convincing pivot towards the upside, right? So, and now particular to the daily, yes, cross upside of the SMA 14, but we are in the gravitational zone of the bear weakness percentile, which would essentially pull us right back into the opposing zones, into the bullish control zones, right? So now notice that the 3-day is expecting a little bit of resistance here. As well as the 5-day, right? So if I'm going to be very honest here, yeah, we could face a very short-term resistance, but another thing to kind of keep in mind is that it's in the gravitational zone. So there is a probability here to where we can succeed the upside of that SMA 14. Same situation here with the 5-day iteration, right? But if we do get a retracement back from that SMA 14 on the 3-day, then that could be indicative of what we're already looking at, right? So particularly to the bi-daily iteration here, we can get that thrust to about 175, 176, whatever those targets are, and then retrace back to the back to our current highs to validate as a current, as a valid area of support, which would also support this. Right? Immediate short-term upside move outside of the triangle, breakout, and then we start validating the breakout out of the triangle for a continuation to the upside. Okay, so everything is rhyming pretty nicely, guys. Remember, I don't hold a crystal ball. There's no way I can tell you where this is going to go or where it's not going to go. Price action doesn't have to do anything we want. Okay, it can do whatever the heck it wants because we're all deciding to do things together in just different manners, right? There's no controlling that. Okay, you guys, I'm only here to kind of give to you my opinion over what's currently presented within the charts. Okay, you guys, and that's really it. All right, you guys, but please remember first and foremost that I am not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. Okay, you guys, I need you to do your own due diligence and everything will be cool. But with that said, I wish you well, a very, very good night, and I will catch you at the bell mañana. Adios.